All right, hey, hope you're doing well. I wanted to just shoot a quick video out here in beautiful Southern California, San Diego. They're setting up for a surf competition. You can see the pier. You can see out there on the water, there's a number of surfers out there. I was here for a meeting of just top real estate investors around the country. I was speaking on operations. That was the focus, but I really want to talk to you about the unemployment numbers that came out for August, and you see it's about 80,000 in terms of the job numbers. But when you look at the unemployment hiring, when you look at the hiring numbers, you also want to think second level. What does it mean? What's it comprised of? And when you take a look at that, what you see is that 70% of those jobs, and I spoke about this before, were coming from the what would be called the pandemic categories. And what I mean by that is hospitality, leisure, healthcare. These made up about 70% of the job gains. So that leaves about 52,000 in other regular jobs, dramatically down from May at about 112,000. And so if you look over the last 3 months, that averages out about 25,000-ish jobs that were created outside of that pandemic catch-up category. I mean by that is that a lot of the hotels, restaurants, travel, leisure, healthcare, they're still trying to catch up from the loss of employees during the pandemic. So what does that mean? It means, that you can see that it's a pre-recessionary type hiring where you see declining job numbers, employers, hiring less jobs. You also see in the automotive category more inventory clicking up. And so it's something that causes us to think about it, right? Because, the Fed has raised interest rates with an intentionality to slow the economy down, and it's been such a robust economy. Yeah, we've had the breakage with some of the bank failures because of their, investment portfolio and what happened with interest rates and their lack of financial planning. And that's something, you and I can learn from as well, being more financially astute and planning ahead. But I think about this, and our team talks about it, because again, what that means is that you have the potential for the recession ahead of us. You also have the potential for more people that would ultimately face unemployment. And then, that means higher turnover, higher R&M at properties, and the need for better operations. And so, ideally also too, we're here at this conference, not only speaking on that, but studying, focus, and improving, And so I want to encourage you to be thoughtful in your preparations. And again, for us, I look at that and I think about not only what's on the horizon, but what that means for opportunity. Because as I shared, I know there's other properties that are going to be coming into the market. It's going to present an opportunity for us and our investors. And then when you couple that together with a slowing economy or recession, it's going to present even what I would call a better opportunity for us. Now, and again, that's where you have to overcome some of the psychology pieces, because a lot of times people in this kind of downturn moment start to be moved by fear. And again, I spoke about that before. So I want to encourage you to master your emotions so that you can achieve the greatest financial outcome for you and your family. Hey, thank you so much again. Just look at beautiful the pier out there. I walked on the pier this morning after the gym. Fantastic. And hey, you have a blessed and victorious week, for this is the week God has ordained for you.